An emergency fund should be safe, boring, and reachable fast. Here's what you need to know. Where you keep your emergency fund matters because easy access can quietly turn into spending. If it sits in your checking account, it earns low yield and blends in with everyday money. If it's cash at home, it's not FDIC or NCUA insured, and loss is final. If it's all inside one app, one lockout can freeze everything. Debit card access also raises fraud exposure, and instant transfers can hide fees. The right emergency fund setup balances speed, safety, and separation from your spending. Same-day access matters for car repairs or urgent travel, but investing the money adds forced selling risk if markets drop. Insurance limits are real. FDIC and NCUA generally cover up to $250,000 per depositor, per institution, per ownership category. Keep the fund in a separate account and know your transfer rails, AIC, cards, and wires, so overdrafts don't eat it. A simple way to get this right is to tier your emergency fund by how fast you'll need it. Tier 1 is same-day cash, like a small buffer you can access immediately. Tier 2 is 1 to 3 day money, usually moved by ACH, which is typically free but not instant. Skip wires for emergencies unless you must, because you pay for speed. Tier 3 is a 5 to 7 day buffer, and you should test withdrawal friction monthly before you need it. Think of accounts as tools and match them to each tier of your emergency fund. Keep the first $500 in checking so it's there the same day, but don't park the whole fund there. Put the main emergency cash in a high-yield savings account so it's separate and still earns something. If transfer limits or rules worry you, a traditional savings account can reduce surprises. Money market accounts can add ATM access, and CDs only fit less likely emergencies. Splitting tiers also helps avoid overdrafts. Before you pick an account, run a quick safety and fee checklist so your emergency fund doesn't backfire. Confirm FDIC or NCUA coverage, and avoid monthly maintenance fees that punish you for being prepared. Watch for minimum balance triggers that suddenly add charges. Verify the withdrawal limit policy, including any excess transaction fees or transfer holds. Test transfer speed with a small amount first, and prevent single point failure by using at least 2 separate institutions or access methods. If your emergency fund isn't FDIC or NCUA insured, it's not fully protected. BankingHub can match you to accounts based on how you actually bank and show the real dollar impact for your balance. Free, takes 2 minutes, and the link is in the description.